Hey there, Craig. Happy Rock and Roll Friday, actually. Rock and Roll Friday. So happy Friday to you.
Happy Friday.
Yeah,
Glad to be here.
yeah. Got my another cap on. It's Billy May, your hat dude wearing mortgage guy with Craig Garcia, president of Capital Partners Mortgage, coming to you live from I call it the 1305 studio. Actually, it's my studio, my home studio. So
It's very nice. Looks very very tropical and very nice there behind you.
yeah, cooler weather right here in South Florida, right, Craig?
It's been so nice in the morning. I can go to my car and not break out in a sweat. It's been
True.
delightful.
That is true. Living in South Florida, as soon as you walk out your front door, you sweat by the time you get into the car. That is true. But that's some things we have to deal with living in luxury, right?
This is the beginning of the time when we live here and we say, "Boy, this is why I live here."
Yeah, living the dream. Exactly. So as usual, we're going to talk about sometimes I usually out three things, but we're going to talk about a number of topics. We're going to really narrow it down, but we're going to start off with mortgage rates, but then we're going to do a real deep dive into condo lending, right, Craig?
Yeah, it's a big topic for us down here, and certainly something that gets talked about a lot. But figured this would be a good opportunity, kind of lay out some of the building blocks and go deep on some of the topics, and have something that people can come back to if they want to get brushed up on this situation. And it's such a big part of our market that we thought it
It
would be
is.
important to cover.
Yeah, yeah. Especially in South Florida, kind of if you're a first time home buyer, chances are you may have to buy a condominium for the most part. So that's why it's kind of a good thing to address. But let's first talk about mortgage rates. The Freddie Mac survey came out sort of the second week in a row where we're getting lower, and the bond market dipped below four, and for the first time in about a year. So rates are looking good, or getting in that low six range. But who knows how long this will last, right?
No, I mean we're on this trajectory, and until the is over,
Right.
we may not get any other big information, any big data points that the bond market can use to reevaluate what's going to happen. And so, so yeah, so things have been pretty good as far as interest rates goes.
Yeah.
Thankfully, they're definitely the lowest that they've been in a year, and they're probably as low as they've been at almost any time during the last couple years.
Yeah, really since September of 2022. That's remember the beginning of 2022 is when the rates started going up. So the past
Can't
3 years, I
forget.
think we're at the bottom. So I hear people online, oh, it's going to get below six. There's no guarantee of that, and this could be short lived. This could be a unique window to lock in a good rate.
Yeah, no, there's definitely, we know there's going to be a change in the Fed, you know what I mean, next year. And there's definitely people that have the opinion that, hey, what the Fed does control is the short-term rates, but the long-term rates, that's under the control of the investors who are investing in the bond market. They may see this push for lower rates as longer-term inflationary, and so, I think it's yet to be
That's not good
seen
for
exactly
mortgage
how it's going to
rates.
play out.
Yeah,
Yeah.
yeah. Matter of fact, I think Jerome Powell said this week he doesn't want to get involved in the housing market, basically. Kind of the condensed version, he said. So, but we shall see. But let's dig deep into our condo lending. We started off talking about condo lending. It's huge down here in South Florida. There's a lot of misnomers out there about condo lending. One of the things too is I just handed in a loan this week. For example, there's some more risk in a condo loan as well. People ask us, hey, what's my mortgage rate or what's the rate? I always say mortgage rate depends on a number of factors, of course. Loan amount, down payment. Property type is one of them, and a condominium does have more risk for the investors. Yeah, there's a Fannie Mae kind of upcharge, so to speak, for condominium, and so there is some pricing slightly variable on condominiums.
Yeah, definitely there's some pricing differences. I mean, I think the biggest difference, obviously, anytime you go and, it's funny, we can have a customer who is fully qualified and can, qualify for 5% down, 3% down if they're a first time home buyer on a conventional loan, and can buy any home or townhouse that they find as long as the property is okay. But the minute that they start now looking, and now it's a condo instead, not only is that borrower's qualification important, but the project, that condominium has to qualify in order to get that level of financing too. So you could have this perfect buyer who on a single family home, we can lend them 97% of the price. And on a condo, If that condo doesn't check all of the boxes, now they can't just we can't do a 97% loan. They can't do 3% down. They do 25% down
Yeah.
because their budget's not putting enough money. So the difference between single family townhouse lending and condo lending can be very different. Can be the same too, but there's this added uncertainty. And part of the it can be frustrating for some people out there is that you can't always know before you get under contract and get all the information for sure whether you're going to be able to do that 97% or whether you might have to do the 25% sometimes or something.
No, it's true. I mean, for example, I have this borrower this past week. He was looking at single family homes a little further north, about an hour and a half north of here. And just could, he needed a garage, he needed a 2-car garage. And they found this beautiful home. It's a 2-story, 2-car garage, 400 grand up in Stewart. Very nice, but it is indeed a condo. It's just like a townhouse, but it's not a townhouse, it's a condo. And so he was going to put 10% down anyways, but this particular condominium doesn't allocate the 10% of the budget for reserves that Fannie Mae likes to do a higher LTV up to 97% LTV. So we can only lend 75% of the sales price of the Fannie Mae loan. I got to get him a second mortgage with an outside bank to go from 75 to 90. So that is doable. And the rest of the condo is fine. It just, some of these condominium associations, they would prefer to keep the budgets lower. And then when they need money, just do an assessment. That doesn't make it a bad thing all the time, but that's what I see in the marketplace. So what's your take on that?
Yeah, I mean, I think, just for those or maybe this is a little bit of new information for. So what happens is, so when we say the condominium has to qualify, what are we talking about? So usually what happens is there's several things. We have to actually send the condominium a whole questionnaire. I mean, it's like a 5-7 page questionnaire, and it asks them a
Yeah.
whole bunch of different questions. So there's a lot of information, but there's some big things that we can just explain so that you understand. One of the things is the budget. So, in a condo, you've got, however many hundreds of people, or dozens of people, however many different unit owners are in that condo. Everybody is chipping in to collectively pay for certain things, the upkeep of the property, the insurance on the property. And so then there's a budget. And that budget, we have to take a look at that budget. And in order to be able to do the same kind of financing that you can do on a single family house or a townhouse, if it's a condo, they want to see that budget that all these unit owners are putting money into, that basically 10% of everything that they're putting in is going to replacement reserves, which is like a piggy bank for the future repair of the roof that they know you're eventually going to have to do, repainting the property, all the upkeep that you have to do over time. There's some new legislation from Florida that's mandating certain reserve requirements on certain types of buildings.
Right.
But historically, that was not the case before recent years.
Yeah, but that all happened in what was that 2021? The Surfside collapse, very sad.
Yep.
That kind of triggered all this, and they put all those laws into place at the beginning of this year, and then all these condo associations were freaking out and everything. And it seems like they're kind of, I don't know, the states has redone it and kind of modified it because there was no way for these condo buildings to comply with all these things in such a quick fashion, basically. So
Yeah. So, I mean, we see a lot of condominiums and they are putting away way more than 10% of the budget into the reserves, which that would allow them to get a low down payment condo loan in that community,
right,
assuming the other things that we're going to talk about get checked out okay. But then there are others who, they have not gotten there yet. And sometimes we see condos sometimes and they're not putting any money away for reserves. And they've always had a business practice of saying, hey, when we need money to fix something, we're going to do a special assessment and we're just going to send out a bill and everybody pays a little bit extra at that time, and it keeps the monthly payments lower, generally speaking, until you need some to do something, and then they special assess. So, and there's nothing necessarily, wrong with that necessarily, but it does prevent somebody from being able to get a low down payment conventional loan by and large.
right.
And that's so when you hear about a condo, hey, this condo does not have reserves or this condo does have reserves, that's what they're referring to. And usually you got to have the reserves in order to put a small down payment down. If they don't have reserves, doesn't mean you can't get a loan in that condo, just means you may have to put more money down. Uh,
Yeah. Like in my guy, for example, he's got about 10% down and may have to have a 700 credit score. There's could be some other restrictions on that as well.
Yeah. So actually, what you brought up was, hey, you had a condo, they didn't have the reserves. And usually the default answer, and sometimes if you depending on who a customer will go and ask, they'll say, "Oh, I'm sorry, you don't have reserves. You must put 25% down on that condo." And technically that might be the right answer, but it's not necessarily the only answer because you can combine loans. And there are times when we do this where we say, okay, you really want to buy in that condo, but you don't really want to put 25% down. And so what do? We can't do more than a 75% first mortgage, but we can get you a second mortgage to bridge part of that gap. Second mortgage usually is 15%. And so you can get a 75% first mortgage, 15% second, put 10% down on a condominium that doesn't have reserves. Not everybody offers that. It's not super rare, but certainly we've had over the years of doing this, many people have taken that option if they landed on a condo that they really love, just doesn't have the reserves, that requirements in
And
place.
and you hit on something there. Not every lender has that option. We do have that option at Capital Partners. One of the other good things about us, and I always try to sell this, so to speak, to our referral partners and our realtors, is that if you're going to show a condo or if you're going to list a condominium, we at Capital Partners, we've got access to the Fannie Mae approved condo list that's instantaneous, where we could go on there and take a look and say, hey, is this condominium already on the approved list? And then if it is, we don't need that condo questionnaire. The only thing we need is, if I'm not mistaken, is a copy of the master insurance declaration page, right, Craig?
That's right. That's right. So I started a little bit ago saying, hey, one of the things that can be frustrating is you want to get into this condo, but it may not be clear whether or not you can put a small down payment or not, when you're getting into the transaction. What some of the things that we do is like Bill's saying, we have this, we have access to know whether the condo has already been approved by Fannie Mae. I'd say most condos are not already sitting there approved by Fannie Mae. And then there are some that are kind of on this, and you'll hear about this mortgage blacklist. There are some that are on the list and it says, hey, Fannie Mae will not buy a loan in there, or Freddie Mac will not buy a loan in this condo because they know it's got some type of a pending issue. If that issue's been resolved, there is a process where you can get that off of that list. But we can check the list. And then the other thing we do is we do a lot of previewing of budgets and insurance policies. We work with agents every day and look and buyers. And if they're trying to finance a condo, we try to get as much information as we can before they get under contract. So we can say, hey, listen, I see that this looks good for financing. It won't mean that you won't mean that, like, on that big questionnaire that we don't have at that point, that every potential issue we can predict, you know what I mean?
Right, right.
But the big ones, the reserves, the insurance is a big thing, and we kind of started talking about insurance. But yeah, understanding that, hey, this condo is already Fannie Mae approved, and you don't have to have a condo questionnaire.
Right.
That's a money savings, it's a time savings, and then we really just need to look at the insurance.
It's huge, and the agents I work with, especially when they take a listing, I always tell them, "Hey, listen, if you're going to list a condominium, give me that budget up front, give me the address. I'll check if it's already on the approved list. We can help you provide some information to put in the broker remarks in the MLS. Hey, this is a Fannie Mae approved condo already. Here's a local lender that specializes in the condominiums." And we're very, very well versed at that. And I'm sure, like you've seen it, I've seen it hundreds and hundreds of times over the years. If somebody goes to buy a condominium, they're using XYZ mortgage out of Iowa or something, and then they get 3 weeks into the transaction, they find out, oh, we can't approve this, we can't do this loan, even though the borrower is perfect, the building is not. And we try to eliminate that up front at Capital Partners, and
We
try
do,
to
and
mitigate the risk up front, basically.
totally, totally. And I always tell everybody, if you are buying a Florida and you're getting if you're buying in Florida, and you're going to buy a condo and you're getting a mortgage, I think it's very important to work with a local Florida-based lender,
Absolutely.
because when it comes to condos, Florida has rules that are applicable to condos in Florida that are not applicable to condos outside of Florida. So you get somebody from Chicago and they may know the Chicago condo market pretty well, but they just might not be as familiar with what's going on here in Florida.
Right.
And it can get pretty, you know, um, it can get a little sticky sometimes. But yeah, so we were talking, and then so let's go back. So when we're previewing these condos for people, and we do that every day. And so if you're an agent listening to this, if you're a buyer listening to this, and you want us to preview your condo, you can reach out to us. We'd be happy to do it. We do it every day. The insurance is probably behind the reserves. The insurance is one of the bigger pain points that happen these days. The reality is that insurance costs, they're starting to get better now, but we went through
Yes.
a period of time where the insurance costs were escalating on a very rapid basis. And
Yes.
associations and homeowners were getting their renewal bills and going, wow, this is a huge increase. And they were looking for ways to mitigate that increase in their payment. And so some of these associations did some things to lower that insurance increase, things like taking bigger deductibles that may be bigger than what's allowed by Fannie Mae and Freddie Mac. Some of them, didn't insure to replacement cost. So there's things that happen because of this insurance increase, which again, starting to get better, which is great news. But that's one of the things that we see a lot. And so, and I think it's important for you to hear that while there's complexity in this condo space, if you're an agent or you're a buyer, there are a lot of options. So there are definitely situations where we can't fit a condominium loan into the box that's required by Fannie Mae and Freddie Mac, which you really
Right.
need to if you're trying to do small down payments on condos. And we do those all the time. It's definitely possible, but if it falls out of there, we have a bunch of other options that we can do. And we close a lot of condo loans that cannot get done Fannie Mae and Freddie Mac because of a bunch of these different little issues that come up. But we have options. They're
Yeah,
just
that's where the non-QM loans, I mean, I'll have agents ask me about that. Hey, what are these non-QM loans, non-qualified mortgage? Where do they come in? And that's where the non-QM loans, they kind of help us fill that space where Fannie Mae says no, and a non-QM lender who we work with, will say yeah.
yeah, and you might hear the term non-warrantable condominium, and that what that means, it's not warrantable to the guidelines of Fannie Mae and Freddie Mac. So basically, if it can't be sold to Fannie Mae and Freddie Mac, then you have to look for one of these non-QM loans. Common misconception is, hey, if you don't have reserves, it's non-warrantable, which is not true. So because you can not have reserves, but you could do a limited review, with Fannie Mae or a streamlined review with Freddie Mac. You just have putting more money down, but you're still getting a Fannie Mae, Freddie Mac loan.
Yeah, like my guy I'm having right now with the first and second mortgage. He's getting a 75% first mortgage. They don't have enough
That's right.
reserves, and they're getting the second mortgage. And like you said, they're doing the limited review, so that it is doable. Now he is putting
Yeah.
10% down, so
Yeah.
yeah.
But I think you got to be careful though sometimes because sometimes there are some people out there, whether it's an agent or even some loan officers, and they will have the impression that if you don't have reserves, it's not warrantable. But that's not
Yes.
really
I've
the
heard that.
case.
I've heard people make that mistake before. They just hear that and they think, "Oh, you can't get a loan." And like you said, we have the non-QM products. Now, the non-QM products, you're not going to get a non-QM product with minimum down payment.
Correct. That's true. And I think another thing that I would say that it's very important to understand that not all lenders apply the rules exactly the same way.
Good point.
We operate on this in our own little world. We're set up as a mortgage banker. Like we have many different places we can close a loan and place a loan with. Yeah, and so we know that all of the investors that we work with that love to buy loans from us, not all of them handle the condominiums the same way. So there are, I mean, and I'll give you an example. There are some of our lenders that we work with, just because it's on that Fannie Mae approved list, they still want a condo questionnaire. They don't just say, "Hey, listen, that's fine that it's on that list. We want you to do all the diligence on that anyway." And then we have other investors that are perfectly fine accepting a Fannie Mae approved condo as long as we underwrite, the insurance on the property, and
Right.
there's no other apparent issues going on. So now that being said, there even issues like underwriting a budget, right? So we've had so many loans over the years where a borrower will come to us and they've been turned down for their condo loan because they didn't have reserves. And when we look at the budget, we think they have reserves because there are certain things that you can do with the calculation and how you arrive at determining whether somebody has 10% per the guidelines.
That's a good point. I've seen this on a number of occasions.
Not every lender does that the same way.
I
And
know.
so it's not as cut and dry. And so if you're an agent and you look at your budget and you want to get, you'd like to preview it yourself and understand, and you look at the budget and you see, hey, there's $1 million in total expenditures or revenue for the year, and you're saying, so you're looking for 10% of that. You're looking for $100,000 in reserves, and you see 90,000. You might think, oh, this isn't going to work. But it goes deeper than that. There are some things that we can pull out of that budget before we do that calculation to that the 90,000 might be enough. If they've got out of that $1 million, if $280,000 is for the cable bill for the year,
Right. Right.
we get to take that out of the million before we say, hey, it's 90% or 90,000, 10% of what's there. So there's a few different things like that. And it's important to work with people who are, used to looking at these budgets, because every budget that we see is different.
Yeah.
So
For
anyway,
sure.
that's what we do it a lot, and we're always, being as lenient as we can that we're allowed to be in calculating what's got reserves and what doesn't. And we do close a lot of loans that sometimes another lender said, hey, we can't do the loan that way, and we've been able to. So
Absolutely. Yeah. Yeah. The budget is huge. Copy the
yeah,
master insurance declaration page. That's why I tell the agents, hey, you got to try to get those two things even before we make the offer. Yeah, and the listing agents should have that stuff in the MLS, but a lot of times they don't. Those are two things. Are there any assessments? And if there is an assessment, yes, hey, what's it for? And we've seen these. You and I have seen these how many times? Well, we had an inspection, that 50-year milestone or that 40-year milestone, and maybe they were having some concrete work done, and then you get a copy of that inspection report they had done, and it's like, oh God, it says about falling concrete and all kinds of stuff on there. It can be a nightmare.
yeah, no, I'd say if you that's one of those things where if you happen to be a condo could be in the middle of their 40-year certification, they could be in the middle of a big concrete restoration project. There are times where if the timing is such that they're in the middle of that, they may have a hard time getting a Fannie Mae, Freddie Mac loan. It doesn't mean though that they can't get any loan in there. And some of these alternative loans, some of them are not that cost prohibitive. You know what I mean? They're not.
No,
It's not
no,
like
they're not bad. You're
um,
right. They're
yeah, no,
comp.
no. Yeah, no, no, it's definitely in the realm of getting the deal done. And I do think that if you structure a transaction, hey, maybe, if you're negotiating, and I would say, the one nice thing right now is if you are buying a condo, you probably have a little bit of negotiating opportunity with the seller. That's definitely probably an opportunity that you have. And certainly if you find out that, hey, this condos can't get a regular loan, I got to put some extra money out of pocket, potentially negotiating some type of a credit to offset some
For
extra costs
sure.
that you might have for the kind of loan that you're trying to get to buy there. We see that a lot too.
Yeah, you're absolutely correct. And there is a lot more, many more condos in the market now, and you can get seller concessions, and for first time home buyers, like I'd mentioned earlier, first time home buyers, that's in South Florida. It's kind of, if you're under $300,000, basically, you're kind of looking at a condo. Now, one misperception or misconception I have frequently, I always ask Craig, is I'll have an agent has a listing and they'll call me up and they're like, hey, Bill, is this on the FHA approved condo list?
Yeah.
And that's pretty much, I'm like, I think there's like three in all of Broward County, I think, or something.
I always like to say it's kind of like FHA and condo is like oil and water. Like it
Yeah,
just,
yeah. X. I do I'm like, no, no,
yeah.
no, no.
Yeah,
So
no, and I'll explain the biggest reason why most people do not understand this. At one point, there were some condos that were FHA approved. They changed the way that they did those approvals, but now you can barely find any condo that's FHA approved. And there's one big reason, and it's not reserves, it's not insurance, it's not litigation. It's this thing that people don't even believe. I didn't believe when I first heard it. Leasing restrictions. Okay. So FHA, it's a HUD program, and there's this piece of HUD and fair housing that doesn't want to have opportunities where discrimination can happen. So leasing, so any condominium that has any leasing restrictions is prohibited from being approved for an FHA loan. What's a leasing restriction? A leasing restriction is if I was the owner of a condo and I wanted to rent it out to somebody, if anybody else has a say in who I rent that condo out to, like if the condominium board has to approve my tenant,
which is very
the,
common,
or the management company has
right?
to approve my tenant, that's a leasing restriction. And if you go and ask 99 condominium or 100 condominium communities, hey, if I want to if I own there and I want to rent to a tenant, do you have a say or does the management company have a say? The vast majority of them say, well, yeah, we definitely, as part of what we want to do, we want to make sure we're doing reviews and doing background checks on who we let be a tenant in our building because we want to control that. We want to have a safe community. You know what I mean? Now, and there's great reasons why they would want to do that, but because it opens the door to some local discrimination, FHA won't allow those condominiums to be approved, and that's the
Yeah, and
reason.
it was funny because um, FHA doesn't allow it, but VA does. And there's like, I don't know, a couple hundred VA approved condos in Broward County alone, which is
So, Bill, VA condos, right? So we just got done talking about FHA and how difficult it is, and you barely can find anything that's FHA approved. VA, surprisingly, is a little different. And the big reason is that VA, and there's a VA condo database that you can go and search for approved VA condos. There's a lot more than you might think. Obviously, everybody cannot take advantage of that. You have to be a veteran with a certificate of eligibility. But the difference with VA condos is they do not expire. They do not fall off of that list after time goes by. So,
I
so Bill,
know it's a great feature. There's a lot of them out there.
that's right. And the approval process and the insurance underwriting guidelines and everything, VA is the most lenient when it comes to that type of stuff. So if it's still on the list as an approved VA condo and you're a veteran, you can probably, as long as they've got insurance to, a reasonable degree, not the exacting standards maybe of Fannie and Freddie, but there's a really good chance that you're going to be able to get that condo and get a
Right.
VA loan, which is zero down, no MI. It's a fantastic deal.
Oh, absolutely. VA is definitely a way to go. But just to be clear for our referral partners, if you have a buyer buying a condo that's VA approved, the only thing we need to get from the condo association is the master insurance declaration page.
Yeah, yeah, we just have to get the insurance.
Yeah, we don't need we don't even need the budget.
That's right. That's right. Yeah, no, it's and that could have been approved 15 years ago.
Yeah,
So
it's kind of
yeah,
crazy actually when you think about
it
it. But
is in the environment that we've been in the last couple of years with condos, it is pretty wild the amount of flexibility that still exists in that little
yeah,
niche. So yeah,
yeah, and there is a website and it's public knowledge. But for the average person to go on there and kind of click around, that it can be a little confusing because a lot of times on there you have to click on it, you might be rejected and so forth and everything.
yeah,
So just call us and we'll help you assist you with that and everything. Yeah, VA approved condos. It's that is something that's kind of rare. People don't realize how many there are. Oh, in Broward County, there's a lot. Palm Beach in Miami, for some reason, there's not as many,
yep.
but they're out there.
They are. There are. So what
Yeah.
else did we not talk about with condos, Bill? We've gone pretty deep here.
I think the big thing is really you know to tell the agents, empower the agents. What do we need? Master insurance, declaration page. The budget, recent budget assessments. If there are upcoming assessments, now this comes to the time of year where you start hearing about that because they're going to meet, they're planning their budget for next year. There's just going to be so many pitfalls, that we come across. But that assessments thing, and usually I think most agents know to ask about that, about the assessments. But on the condo questionnaire, on that full condo questionnaire, I think one of the questions that's on there, Craig, is have you had a building inspection done in the past 3 years? Correct.
Yeah, this is a big one that's come up, and this has become a big thing since the unfortunate events in Surfside with the collapse of the tower. They basically put some new rules in there to make sure that lenders were identifying situations that could be potentially leading to safety concerns, and obviously they don't want to lend in those communities. And the state has taken measures as well, But now that's definitely a question. Anytime we do a questionnaire, even if they're putting a bigger down payment down, but there's series of questions, and yeah, if they've had any kind of a structural or engineering report done in the last 3 years, then the lender needs a copy of it. And then if there's repairs that that thing is saying that you have to make, then they're usually going to be looking to see that those repairs have been done. And so that's definitely create a level of a burden of having to review that stuff that lenders never had to deal with before. You know what I mean? In the 25 years prior to that we've been doing this, we never would ask for something like that. And
Right.
now suddenly we're looking at, these 80-page engineering reports
I
for
know, and
condos.
we get them.
Yeah,
And
I
then
know.
you start reading it and you're like, "Oh my gosh, I can't believe this." But then, I've had agents say, "Oh, but all those repairs were done, they're paid for, they're complete." I'm like, "Okay, but from a lending perspective, you'd have to really see it." I mean, the appraiser doesn't know when they go out there, so we'd have to provide proof that, hey, all this stuff was in the report, but everything's been complete. And it's just, I've just seen more often than not, unfortunately, it can foul up deals, that unfortunately. So it's kind of sad
Yeah,
actually.
it is unfortunate, and it's a timing issue. I mean, on the good side of things, hey, all these condos are doing something proactive to make sure they don't have problems in the future, right?
Right.
But depending on where they are in that process, it could make things a little more challenging for the residents and the buyers while they're in the middle of that process. It's
Yeah.
just unfortunate. I do think that if you just look at the condominium world as a whole down here, in all of Florida, this process that everybody's going through with this, it's been painful certainly for some people and some condominiums associations. But I think that the health of the average condominium association on the other side of funding these reserve accounts and doing all these inspections and doing this work, you're going to have a lot stronger, healthier condominium associations at the end of the day. Yeah, if you're in the middle of one, your lending options may be impacted. I mean, we had somebody and this can happen if you're trying to buy there. This can affect you if you're just living in the condominium. And now we had people that had closed a few years ago and they were looking to do a refinance. And it turns out that, somebody that we talked to very recently, their condominium was one of these where the insurance costs had spiked and they took some liberties with trying to peel out some pieces of their their insurance policy. Their insurance policy didn't meet the qualifications.
So we couldn't refinance them because of what the master insurance is. Yeah.
They have to stay with the loan that they have and we have to relook at it again. Maybe once they renew, maybe they'll have better options. And then maybe there'll be an option that would make it worthwhile for them to refinance at that time if the insurance is in line. So it's just one of those things. The better the insurance is, the better the health of the condominium, the better options that people have refinancing or buying with a loan. So that's just you
Things
just
are
have to work through those
things
things.
are getting better. There's no doubt about it. I think with the state focusing on it now, things are getting better. There's more insurance companies down here in Florida now. Yeah, some of the premiums are coming down. And as you stated, a lot of these condo associations, they have budgeted for reserves or they've done the necessary repairs. I believe it's heading in the right direction. Like I said, with the first time home buyers, it seems like a lot of them, and as we've talked about in the past, and especially in Broward County, there's no more land available. So if you're a first time home buyer, you're really attached housing is going to be the way to go. It seems to be the wave of the future, sadly, especially we live kind of a metropolitan area down here. Uh, and so all these condos, older condo buildings, they're being fixed, they're being repaired, et cetera, et cetera. There's a good time. There's a lot of stuff out there on the market right now if you're a first time home buyer. But if you are an agent, whether you're a selling agent or a listing agent, you're looking to show someone a condominium, contact us. I can help scrub it down and I can go on the list and, look at condos by city, by zip code, et cetera, et cetera. Say, hey, by the way, we cannot provide you a list of these condos because that list is always changing. But if you check with me, we will check, we'll do our due diligence and we'll say, hey, here's this condo is good to go right now. It's been already vetted by Fannie Mae and it's good in there. Or we check on the BA list, et cetera, et cetera. So it is daunting, and for a home buyer, it can be daunting, going out looking at condos. There's no doubt about that.
Yeah, no. So I mean, but you don't have to do it alone. Obviously, that's why you have people like us. Your real estate agents. Some of these some agents are very in tune with what we've been talking about here, and so just you got to get the right team, and and it can be a good situation at the end of the day. And you just have to understand what you're getting into. So that's the
Absolutely. Absolutely. So, any other closing thoughts in regards to our condo lending, Craig?
it's I mean it's something that we do a lot of. I always have found for whatever reason that we tend to I tend to gravitate and try to when there's real challenges with some things, instead of avoiding it, we usually try to understand as much as we can about it, so at least we can help people through the challenges. It's been a big learning opportunity for us, I would say, over the last couple of years during this whole transition with the
Absolutely.
condo lending space. But the amount of different options that are available, it's really pretty cool that there are all these different ways to do this. And it's you just have to kind of do your diligence and pay attention
Yeah.
and try to steer people in the right direction.
Absolutely. Absolutely. So, in closing, I would say, remember, FHA and condo, no.
Yes.
VA and condo, possibly, a lot more than you think.
Yep.
And then with condo lending conventional, always get a copy of that approved budget, copy of the master insurance declaration page. Have there been any assessments? And the big one is, has the building had a structural engineering report done the past 3 years? Those are kind of some of the bullet points that I try to inform my agents about about condo lending. But speaking of teams, you said something about team about a minute or two ago. Of course, this weekend's gonna be the battle of the NFL toilet bowl, where the Dolphins are traveling, I believe, up to Cleveland, playing the 1-5 Cleveland Browns. Now, I went to a Dolphins game last Sunday, first game I'd been to in like 6 years. They could have won that game, but of course, they lost at like the last minute. So,
I thought they were going to win, but
me too.
they did their typical Dolphin thing and broke our
Yeah,
hearts. Hootie's
yeah.
right. The Dolphins, they make you cry. So
They
what
do.
are you gonna do?
That is true. As a matter of fact, I just read recently that Darius Rucker from Hootie is coming in concert, I think, in March.
There you go. There you go.
Yeah. So,
So
but
yeah,
all right. Sounds good, Craig. We really did a deep dive into condominium lending. I hope people out there, our subscribers, have got some valuable information about condo lending today. So,
awesome. Great doing this with you. And next time we'll see you at
the closing table.
closing table. There you
Have a
go.
great weekend, Craig.
Bye bye.
Take care. Bye now.